Hi, my name is Dan, and today I want to walk through the steps that I first took on my investment journey. I want to talk about what I've invested in and how it's gone so far, which, given the current economic and global pandemic situation, didn't start out well. My journey started back in December of 2019 when I went initially to the library, picked up a couple of books, and then I quickly moved on to YouTube and started looking at different videos, looking at how different people were doing things. And at that point then I felt I was qualified enough to confidently start losing my money. I began by opening an account with a company called Vanguard. In particular, I opened up a stocks and shares ISA, which if you're from outside the UK, an ISA stands for Independent Savings Account. Or individual savings account, and it's essentially a tax-free savings account, but it has limits on it, T's and C's and other things like that. Previous to this, I only had a cash ISA, which was with a high street bank, and it was earning, and this was pre-pandemic, 0.5% interest rates, which was nothing. It was nothing. So I picked Vanguard because they deal primarily in index funds. And for those of you that don't know, an index fund is essentially a unit, or a bucket if you will, of different stocks and shares and bonds, or a mixture of them all, that is designed to mimic or copy a financial market or various financial markets. These funds are a passive investment strategy, and what that means is that it involves very little work on your behalf, just like a savings account. You just deposit the money and the rest is more or less done. And it also involves little work on behalf of the company as well to actively manage that fund. Therefore, there's less fees to go along with that account. And in the long run, it's supposed to perform really well. And by long run, I also mean 10 plus years. So yeah, check in with me in 10 years time. I'll let you know. I started by making a deposit into the Vanguard Life Strategy 100% Equity Fund. This particular fund is fully comprised of stocks and shares, no bonds in it whatsoever, hence the 100%. And Vanguard actually provide a risk profile for all of their products. On a scale of 1 to 7, this particular product sits at 5. So I'm pretty comfortable in taking this risk, as it's an index fund, which, like I said, is a group of various stocks and shares. So it's pretty well diversified as far as I'm concerned. And it's not like I'm investing all my money into one particular stock of one company, which would then potentially just collapse and I'd lose everything. I also set up a small investment in the Life Strategy 40% fund, purely out of my own curiosity, just to see how well that performed against the 100% fund. And again, this 40% fund is 40% stocks and shares versus 60% bonds, making up the total fund. So I began by buying these funds back in January of 2020. And soon enough, February, March rolls around, and then there's the global pandemic, and quickly following that, the global economic crisis, in which pretty much every market on Earth took a hit, or a correction. I personally got hit by this as well, just like everybody else. The value of the funds that I had invested in had dropped initially 10%, then they dropped to negative 20%, and I think at their peak, around the end of March, early April, they were, I think, at their worst, minus 30%. Now at this point, I started questioning whether I should take all my money out. Probably like everyone else in the world at this point, the economic scenario seemed all doom and gloom, and it looked like the best thing to do was to get all your money out or lose it altogether. But instead I began doing some research, and I've seen various different opinions. There were a lot of people out there that it was complete doom and gloom, the markets are going to crash and crash hard. And there were other people out there that were saying, nope, this is a fire sale, get in there, buy it now whilst it's cheap. And having weighed up both sides of the argument, I felt that the best thing to do was to carry on investing. Now for me, it wasn't such a big issue because I'm only playing with money that I can afford to lose. I'm not chucking my next month's rent down the drain into this particular investment fund or anything like that, which is a bit of advice. Don't invest with money that you can't afford not to lose. It's gambling at the end of the day, essentially. And then within about a month, the economic scenario started to take a bit of an upturn. I saw this in my personal rate of return on my funds. They started to climb up again, and they levied out around about 5% for a week or so. And then came the dividend date, which was the 29th of the 5th, 2020, which, just like stocks and shares, Vanguard Life Strategy funds are subject to dividends as well. Again, completely on the basis of what's called an ex-dividend date, which in this case was the 1st of the 4th, 2020. And what that meant was that you need to have owned those particular units of funds before that date in order to qualify for the dividend. Now, it's important to note here, I bought into an accumulation share class rather than an income share class. And what that means is that my dividends are reinvested back into the funds that I own versus an income share class, which would then pay that out directly to you. So that really brings me up to where I am now, which is a current personal rate of return of 10 to 12%, which by no means isn't probably great. I don't actually know. Don't know enough about it. It's a green number, so hell, it's a lot better than where I was 2 months ago at minus 30%. I'll take it. So the most important thing that I've learned through doing this over the past 6 months, 6 months? It's June, isn't it? It's June? June. I've been at home way too long, it's June. So the most important thing that I've learned so far in doing this, and the one thing that you should take away from this video, if nothing else, is this. And that is that the value of an index fund or a stock or a share goes up and down on a daily basis. But that value is what is called an unrealized value. So, for example, if you bought on day one and you bought an index fund of £100 and day two it dropped down to £50, you haven't actually lost any money at that point unless you hit the sell button. If you hit that sell button, at that point you realize that value and you lose or gain depending on whatever position that unrealized value is at. In the scenario where it is down in the negative, at this point you don't want to sell. You want to hold on to it for as long as you possibly can until such a point where it's in the green and positive. At that point, then you can sell it. So that leads me on to my question for you, and that is, have you or would you ever invest in index funds? And if you have, what platform do you use and why? Leave it in the comments below. So thanks guys for watching this video. I hope you found this content useful. If you did, please give it a big thumbs up. And if you want to see more about investment and where this is all going, then please hit that subscribe button.